Ladies and gentlemen, this man that you see on my computer screen right now, did you know that he sucks the blood of children? And even worse, he buys terrible stocks. I don't know if he actually sucks the bloods of children. Who knows, We're going to talk about George Soros, okay? George Soros is famous, I guess you could say, because he broke the pound, something like that. And he's also vilified by the right wing because he finances a bunch of Democrat policies. Cool. But in this video, we're not going to talk about the politics of George Soros. We're going to talk about an interesting thing that I saw that George is invested in. And it makes me doubt whether this guy actually knows what he's doing. I know it may sound crazy, but if this guy is a trader, he likes to trade stocks, okay, I could potentially see this. I can understand it. But if he's a long-term investor, I'm here to tell you, I think this guy is a clown. And I'm not even joking. Let's go see what old George Soros is invested in. Specifically, we're going to talk about Rivian Automotive. So George Soros, the genius hedge fund manager, has 10% of his portfolio in Rivian stock. Rivian! With an average buy price of 103. What is old Rivian trading at now? 27! Go! No, my lord! Soros got wrecked! So apparently, I don't know, he sees something in Rivian. Now, I'm a certified CPA, right? And I don't claim that I'm a genius stock investor. But I know how to identify insanely risky clown stocks that will probably have you lose all your money. And in my opinion, which we're about to go see, I think Rivian is one of those stocks. So George, I really question why you bought this. Are you just day trading? You day trader, bro? Because anybody with half a brain would look at Rivian and say, there's nothing holding this stock up. It's just hot trash. What is the market cap, by the way? What is the market cap of this stock? $25 billion. Okay. So I pulled up the most recent quarterly report for Rivian, my Slivian, and we're going to go look at the balance sheet, okay? We're going to start with the balance sheet. We're going to work our way down to the income statement, and we're going to look at the statement of cash flows. So, total current assets. Rivian has burned roughly $4 billion in cash in current assets in the last 9 months. Okay. And we can see their cash balance has gone down from 18 billion down to 13 billion. Their accounts receivable has gone up, so maybe they're generating a little bit more sales. Their inventory has gone up minutely, and other current assets have gone down. So overall, Rivian's current assets, liquid assets that can be converted to cash within a year, have gone down by about $4 billion. Why? We'll see. Property, plant, and equipment has gone up a little bit. Okay. Operating leases, basically the same, and other non-current assets. So overall, their long-term assets have barely budged. But their total assets have gone down by $3.2 billion in the course of 9 months. Where's the money going? I don't see a change in long-term assets, not really huge changes. Where's the money going? I don't know. Let's look at debt. Okay, current liabilities. They currently have $22.1 billion of current liabilities. We compare that to their current assets. They have plenty of cash. Plenty of cash to pay off their short-term debts. As a matter of fact, they could take their cash and pay off all their short-term debts. But you know why they're not going to do that? Because I suspect they have massive negative operating cash flow, and they want to conserve as much cash as they can. They want to delay paying bills as much as possible because they're burning cash hand over fist. That's just my suspicion. So overall, really the debt picture hasn't changed. Debt has gone up by... Okay, it's almost gone up by $1 billion. They've packed on $1 billion of debt. That's not insignificant. Their assets have gone down by $3 billion, and their debt has gone up by $1 billion. So the net change in equity is about $4 billion of equity destruction in the last 9 months. And we can go down and we can see their equity at the end of last year, 2021, was almost $20 billion. And now roughly maybe a little bit less than a fourth of their equity has been obliterated in 9 months. Almost 25% destruction of equity in 9 months. We can also see their accumulated deficit, that's their profit and loss since inception, has increased by $5 billion. So they've incurred $5 billion of losses in the last 9 months. Okay, I'm starting to get sold here, guys. I can see why George is a big fan of this. This is a freaking YOLO. Let's look at the profit and loss. So here we have the 3 months ended September 30th, and then here we have the 9 months ended September 30th, comparative income statements. Let's look at the most recent 3 months. Well, we can see they had revenues over the last 3 months of $536 million. $536 million. I mean, I guess that's okay. Their cost of revenue was $1.5 billion. So their gross profit, their gross loss was $900 million, almost $1 billion. Why? I suspect they have a lot of property, plant, and equipment, a lot of factories, a lot of depreciation, a lot of overhead, and they're not selling many cars. And that fixed overhead is getting allocated to those cars, and it's really destroying their gross profit. That's my suspicion. Basically, it's an economy of scale thing. And the question is, can this company grow fast enough where they get to the point where they can start generating positive cash flow before they have to dilute the shareholders? Because you go back and look at the balance sheet, they've obliterated $4 billion of equity in 9 months. $4 billion. They've burned a lot of assets and they've added some liabilities. I don't know. Okay. So their loss from operations is negative $1.7 billion. So they generated $536 million of revenue and they lost 1.6 or 1.7 billion from their operations. Negative what, 300%? A bottom line loss? That's god awful, okay? This is bad, and that's in 3 months. $1.7 billion lost from operation in 3 months. You look at 9 months, it's $5 billion. Wow, really killing it there, George Soros. I can see why you're a fan of this stock. What a freaking joke. See, people are just trying to find the next Tesla, and it's like, it's just sad. It's just so sad, okay? Now, let's look at the statement of cash flows. So we can see in 2022, right off the bat, they've burned $3.6 billion of cash from operations, and they spent $1 billion in capital expenditures. So total, they spent $4.6 billion in operations and capital expenditures. $4.6 billion burned in 9 months. You project that out, and they roughly have, how much cash do they have? They have, okay, we'll be nice. We'll say they have 14.4. So we take 14.4 divided by, what was it, 4.6. Okay, so they have basically, if they continue their burn rate with operations and capital expenditures, they're going to completely run out of current assets in roughly 2 years, okay? 2 years and some change. And you know there's going to be a dilution event before that because they're not going to wait till the last minute before they run out of cash to issue new shares or go into debt, okay? Now, that assumes that this cash burn, which has happened in the last 9 months, continues operating and capital expenditures. If that slows down, they can last a little bit longer. But I could definitely see a dilution event in the next year and some change. Okay, maybe a year and a half. Because they're going to have to, because they're burning a lot of cash from operations. And we can see that they haven't really issued any stock or anything, because what they're doing is they're living off the cash that they generated from their, I guess, their IPO from initial investors. But at some point, with that cash burn and the amount of money they're spending on capital expenditures, in about 27 months, just under 2 years, they would be completely out of cash, completely out of current assets. And it could get worse. The cash burn could get worse. Their cash burn has increased. Look at year over year. It's gone from 1.5 to 3.6. If that increases faster, they're going to dilute you in a year or less. Easy. Or they're going to go into massive debt. So overall, George, I don't understand I don't understand why you invested in the stock, okay? It's not going out of business within a year. They have a very nice amount of cash on their balance sheet, but that cash is being incinerated by operations and by capital expenditures. And at some point, the current shareholders are going to have to be diluted massively because there's no other way for this company to survive unless they massively fix their horrible losses here. I mean, the margins are just bad. They're not, every truck they sell, they're losing money. They have to ramp up production enough just to have a positive profit on their income statement. And I don't know how cheap these cars are. I mean, how much is a freaking Rivian? Rivian car costs. If we're in a extended recession and these Rivians are insanely expensive, look at this, $68,000, $89,000. If they can't ramp up their production, they're never going to be profitable because they have so much fixed overhead from their factories. It ain't going to happen. And like these are more expensive than Tesla. There's so many luxury cars out there. This is like, they're in trouble. Okay, so I don't understand Soros. Honestly, like after seeing him buy this, he paid $103 per share, it looks like, if this is accurate, for a clown stock. This is, to me, this is common sense. And I'm just a guy in a bathrobe in my freaking garage. Why did you buy this stock, George? I don't quite understand it. Maybe you're actually a clown, like a lot of those right-wing nuts actually say. That's all my thoughts. I wouldn't touch Rivian with a 10-foot pole. It's hot trash, and you have a wonderful day. Cheers!